Hey guys, thanks for joining me again for another chapter review of Success by Design, your comprehensive planning guide for all types of enterprises. Today we're going to be looking at chapter 7, financial projections. Again, before I jump in, I just want to remind you that you can find the free worksheets on successbydesign.biz. If you want to download any of those, you can access them there as well as additional video resources for your needs. So one thing that I'd like to talk about in addition to that is if you really want to dig in and get the most out of writing your plan, I suggest that you purchase your copy of Success by Design, your comprehensive planning guide for all types of enterprises, and the companion workbook. You can find both of those on successbydesign.biz. Now, let's go ahead and jump in. So with financial projections, I have a little quote in here, which I absolutely love. It is by Benjamin Franklin, actually, and you can find it in Poor Richard's Almanac. And what he says is, beware of little expenses. A small leak will sink a great ship. So often what I have found is that business owners, entrepreneurs, and anybody running an organization, when it comes to financial projections, they get just enough to get the ball rolling. And that unfortunately isn't always going to get them to be sustainable long term. So you need to know what it's going to cost your company to operate at maximum capacity with the resources necessary to provide as much as you possibly can at different stages. Because what happens is a lot of companies might do really well, but they can't expand to that next level because they don't understand the cost incurred or necessary to take on to reinforce or restructure that operational structure that was producing at one level may need more. So it may cost you more to produce more at a different level. So that means what kind of investments do you need to make in technology, advancing what you might currently have, or maybe you don't have certain technology that you now need because you're growing. Maybe you need additional equipment to provide additional products and services. Maybe you need additional HR. Those are all very, very important. So if you don't know what it costs you to work at maximum capacity, what it's costing you at that current capacity you want to hit, how many units can you produce at this level, then you're not going to understand what it's going to take to get you to the next level. And this really helps you. You've been working on every chapter we've gone over. There is a financial component to it. You're finding out what it costs you to produce a product or a service through your cost of goods. We talked about overhead. We've also discussed your marketing budget. We've talked about operational budgets. We've talked about your salaries. What are you planning to pay people? Commissions for sales. All of those pieces build into those financial projections. Really, what we're going to be doing in this chapter is not just talking about all of those things, but we're going to be also discussing the descriptions on these different reports that really drive business decisions. Everything is financially driven. You need to know, because you're looking at what's coming in and what's going out, those break-even points, and then your potential profit margins. And then where is that money going? Is that dividends being paid out? Is it being reinvested in different areas of your business? That's going to be the key components to help a business owner make the right decisions quickly for sustainability and long-term growth of their company. So what I want to talk about with that being said is we're going to talk about your financial plan. A financial plan for you is a comprehensive picture of your current finances, your financial goals, and any strategies you've set to achieve those goals. So that includes cash flow, savings, debt, investments, revenue, any insurances, and any other elements of your financial picture. It's going to clearly list the expenses and income associated with managing your business. So a great system that you need to have in place is an accounting software. So bookkeeping and tracking, and that, yes, they are different. You can find a lot of systems that collect data and information for customer payments and things of that nature, but you need a really good bookkeeping and accounting system that's going to take that data and put it into the right areas of your business so that you can print reports such as a profit and loss statement, a balance sheet, and read those reports that are real time, current information to make real time business decisions. So if you don't have that, I highly recommend that you look at that. And we talked about that in previous videos when we talked about the technology that you needed in order to run an area of your business. So when you get the book and you look through it and you read some of this, it goes into detail. And then there's also another book called Success by Design, Implementation and Accountability that goes a lot further in the financial picture detail and talks about the different types of accounting software that you should consider. We're not an advocate for anything. What works for one person, one business may not work for the other. And sometimes you may even need to develop out a proprietary software. because your industry or your service and products may not be consistent across the board. So, and keep in mind, there are softwares up there that are customizable for your needs as well. But definitely get familiar with your financial picture, get familiar with the reports that you need and how to read them. And that's what we're going to talk about today. And then also making sure that you have an accountant on your team as well as a bookkeeper. Yes, there is a difference. One is a bookkeeper entering data and transactions and keeping things organized on a consistent basis so that the data is accurate and reflects real-time information. The accountant is the one that's going to understand where to make adjustments and what it looks like on a tax side and why that information is being recorded or coded specifically the way that it is. And when you get through this piece of your business plan, you too should understand more about your financial picture so that when you are having conversations with an accountant or a bookkeeper or a tax professional, you know how to navigate the things that you need and understand what needs to be done and what's being reported and reflected. When you have a good, solid financial picture that's real and updated with information that's real time and it's accurate, you can not only make good decisions quickly, but it tells you where to invest your dollars when you're making money, where it tells you what your marketing is looking like. It tells you how you're performing in your sales. It tells you how your revenue looks. Where is revenue coming from? What's generating the most for us? It tells you where you're spending too much money. And so you can take and look at those things quickly and go, okay, we need to change this, we need to change that. So it makes it very more effective for you as a business owner to manage your financials. So let's talk about your expenses. So expenses for your business, such as overhead and operating expenses, are money going out of your business. This may include fixed expenses such as rent, consulting fees, utilities, and office supplies. They also include variable and irregular expenses that may be directly tied to the sale of a good or service within your business. A really good example is you might not have to pay out a commission unless somebody is getting that commission, right? But you still want to factor it in to your expenses when you're planning and you're producing or you're planning out your product and service pricing strategies. So, but there's so many different variables there, okay? Some examples of a business expense include, like I said, rent, consulting fees, utilities, maybe your phone services or any other telecommunications, office supplies, any technology, software applications, anything that you need to pay in order to keep the lights on, okay? What's coming out? What are you sending to your vendors? I've included meals and entertainment, travel expenses, bank fees, any purchases ongoing for inventory. And you also need to make sure that if you are keeping inventory on hand, you need to make sure you have a good depreciation process in place for that, as well as a good tracking system, okay? It's very important that you factor that in. Payroll, so personnel and fringe benefits, any taxes that are tied to that as well, subcontractors, and then of course any marketing and advertising. This is not an exhaustive list in the book. It may be variable based on what you're doing. You might have liabilities that you're paying if you took out a loan. So there are so many things you need to think of that you have to pay money out, and it needs to be tracked appropriately. And while I'm saying that, it just dawned on me too that some business owners will muddy up their financials by keeping their personal and their business together. Do not do that. Separate them. You need a business banking account that is separate from your personal, and you need to make sure that you are being legitimate on what you're spending your money on, okay? Talk to a tax professional, talk to an accountant, and get that set up so that you are not in a future issue where it comes to financial regulations, okay, and compliancy with your state and federal governments. All right, let's talk about income. Income is a revenue that the company generates. This is the money coming into the business, and it is tied directly to the sale of goods and services or financial investments and or donations for nonprofits to assist with working capital. These types of revenues should be separated into separate chart of accounts to track where your methods are of generating income. So tracking this information assists with future strategies to continue to grow and increase profitability and cash flow. So if you can find out where the money's coming from, so you can get very specific, if you have revenue generated on income from the sale of goods, you probably should categorize the different types of sales so that you eventually can even drill down further on that. So you can run reports to show which products and services are generating the best return on your investment. So which ones are bringing that bread and butter in for your organization, because that's probably what you're going to want to push out as much. Or maybe it gives you an idea that, hey, these aren't performing as well. What can we do to strengthen this area of income? So it really does give you some insight. So make sure that you're categorizing and you're putting that information into the accounting system so that when you track and you report through your daily bookkeeping, it's being coded and recorded in the right areas. So those reports that you pull reflect the right information, okay? So some examples of business income are going to include products and service sales, interest, dividends, loans, which can also turn into a liability expense. So if money comes in from a loan, it then also hits your expense accounts, so that it's really more on the balance sheet, but it does hit those. And there are adjustments that need to be made to both your income and your expenses and your balance sheet because of liability. So those are all things that should be automatically set up when they first get loaded into your accounting software or your bookkeeping software. And your accountant needs to do that so that if you make a payment, it's going to hit all of the different accounts and reflect accurately on the reports. It'll show that money's going out on the expense side, and it should decrease, your payment should decrease what you owe in liabilities, okay? And then of course, if there's depreciation on different assets, those things also need to be accounted for in the accounting system. All of this information, yes, it's relevant and it's necessary for you to know what your big financial picture looks like. So make sure you have them in place. Okay. It also includes any grants or awards that are given to you. Yes, for-profit companies can get grants. Okay. So if you're not in the grant world, you need to look at my book, Success by Design, Implementation and Accountability, because we also talk about different ways to get funding for your business. How do you access those things as a for-profit company? There's a lot of things available to both for-profit and nonprofit. Federal contracts. There's so many things that if you are not into or doing, you need to get familiar with them so that if you're not doing it, you need to look at it as a way to increase your income. This grants you don't normally pay back, right? And so keep that in mind. You also have donations and gifts, owner's equity or capital investments, which again also can become a liability. So keep that in mind too. All right, so I do mention in the book, again, I am not a financial advisor, and I talk about that in the very beginning of the book with disclaimers, is that everything in here is really designed to give you as a guide. You need to speak with professionals and experts within this industry or this field of expertise, such as financial planners, financial advisors, bookkeepers and accountants. I would say more accountants or tax advisors. Those are your people. Your bookkeeper will assist with the data entry and reconciliations for accurate reporting and tax purposes at the end, but they generally aren't going to be very knowledgeable or an expert within the accounting side of like, why are we doing it this way? How does this look on the report? So make sure you have the right people in place helping you. All right. So, and the cost for all of these expenses. So if you're paying these professionals, you need to make sure that those are also logged into your system and you're factoring that in to those overhead costs and expenses on an ongoing basis, because it may adjust your pricing strategies on your products and services, okay? Every decision financially that you make, it hits your bottom line. It hits the product and service development side as well. It hits the marketing and sales side of it. So be aware of what's going on in the income and outgoing cash flow, okay? All right, so the next thing I want to talk about is your profit and loss statement. So profit and loss statement, what is that? It shows the income coming in, the expenses going out, and what you've made based off of that. So it's either going to show you that you're in a loss, a deficit, because you've spent too much money going out, or it's going to show you that you have so surplus, like you have profited. And at that point, that tells you whether you're performing well. And it also tells you, when you look at it, I'm going to show you a little picture I have here. This template is also free downloadable template, but I'm going to get as close as I can because it's just a small little picture in this book. And this has tongue-tied today, projected profit and loss table. So this is a table to help you fill out information. But generally what you're looking at when you look at this, it's going to tell you what your revenue buckets look like. And if you categorize them, you'll have several. So you can see where you're performing well immediately on a profit and loss statement. And if it doesn't look accurate, then you can be, oh, my bookkeeper is not updating the income as quickly, right? We're not getting these deposits in. Something's wrong. So when your numbers are off, or you go, monthly, I don't know, we've got on here commissions and overhead, marketing, purchases, personnel. Let's say we spend $100,000 in payroll every month, right? That's a high number, I'm sure, for some of you, but let's say that we have that in that bucket, but it ends up being like 200, that's a red flag. Like, what did something get logged in the wrong date, right? Is that the possibility? So that's very important that things are being entered the right dates, the right transactional dates and times, because that's going to affect your profit and loss statements as well. So just be sure that you're looking at that. Understanding your profit and loss statement is going to be extremely important for you, again, so that you can look and go, are we making money? Are we losing money? And where are the pain points, right? Is it we're not making and generating enough income? Well, then let's look at that. Let's drill down. And then that means I need to go back to my marketing and sales team and find out where the issues are. Okay. So that's something too. Or I need to go back to my operational piece. Are we spending too much on supplies and materials? Like, we need to find out where that's coming from, and we might need to make some pricing adjustments, or we need to increase our marketing and our sales, bringing an additional income in, or do we need to launch another product or service to meet market needs? So those are the things you're looking at. Then you're going to be looking at the expenses side and going, are we spending too much with this vendor? Are we spending too much with this supplier? Can we get this phone bill down? Do we need to switch to another plan? Do we have too many staff members? Are we paying too much money in payroll? Is this unapproved overtime? So it really helps you make good decisions quickly, or at least ask the right questions within areas of your business to drill down and find out what needs to be adjusted, and keep your business from having those financial bottlenecks. All right, balance sheet. So a balance sheet is a financial statement that will help you determine the value of your organization by reporting the net worth of your company. It quickly tells you what the entity owns, so your company, what are the assets, and what it owes, your liabilities, and has invested owner's equity in the company. So your balance sheet will also represent the liquidation of your company should you go out of business. Liquidating your assets will equal the total liabilities owed and give you an idea of what's left for the owner's equity, okay? So the formula for a balance sheet is assets equals liabilities plus owner's equity. So understanding that is going to help you to, like I said, determine the valuation of your company. I think it's pretty interesting. This isn't the only way that you look at a valuation of your company. It's a quick snapshot, okay? There are many ways to do a valuation of your company. And if you know anything about certified exit planning, I am a certified exit planning advisor, and there are multiple ways that you can do it. But one of the most unique ways is also looking at intangible capitals that we don't factor on these reports. So you can put things in place to help you grade yourself in these different areas, or get with what we call a SEPA that can help you evaluate your company. So if you're already going and you're moving, and what we're looking at to evaluate your company is to determine what your company is worth if you wanted to sell it and harvest whatever whatever equity you have in it, right? You may not have any equity. It may not really be able to sell for what you think it's worth. So you definitely need to do something of that nature, or set your company up in the beginning stages with this valuation mentality in mind, okay? And so you can get more information on that. You can always go to Success by Design and get some more information. We talk a little bit about that in other books, Success by Design, Implementation and Accountability. That talks a little bit about that exit strategy as well. And then, of course, when you're doing that, we talk a little bit about it when we get further down into some of these other videos, when we do exit and expansion strategies, okay? You always want to think about the end in mind, and that is just good business strategy. Exit strategies should be considered now, not when you're ready to exit, because there's a lot of strategy that goes into preparing yourself to get off the business highway. All right, so that's a whole tangent right there. Let's talk about assets. So your assets should represent the monetary value less the depreciation. Assets are property owned by your company that have value that can be liquidated to create cash flow to meet debts or commitments. Some examples of assets will include cash on hand, cash in the bank, open receivables, inventory. So remember, depreciate that inventory, because it may actually show on your paperwork, on your reports, that it's worth way more than it is. So you need to know the actual market value for those, and that means you need to depreciate them. So what you put them in as in the beginning, you may have monthly depreciation schedules, you might have quarterly or annually. It depends on the way that you decide to set it up, okay? Or whatever you're required to. Maybe there's an industry standard. Property. So if you own any property, any equipment, deferred income. So you need to also make sure that if you have deferred income that doesn't hit at a certain time, it doesn't show up on your the cash came in, but it hasn't actually been applied yet because it's income that will be allocated later. That's also considered an asset. You have patents, copyrights, franchises, and licenses. So those are things that you may not even be thinking of that are also considered assets. Maybe you own a bunch of different domain names. Those are, you need to find out what the value is of those. Those are assets as well. And so the best way to get that is create yourself or have your accountant or tax professional have an asset management process or tracking system for you. Get the assets allocated into your system and make sure that you're actually tracking that information so you can get the right reports. And it should be showing up on your balance sheet as well. Okay. Let's see here. So lots of good quality information in this chapter. In chapter 5, operational plans, we talked about that in prior videos. Remember, we're in chapter 7 right now. You had to list different assets that were allocated to different departments, okay? And you did that. That should have helped you at least create a list of your current assets or future assets that you needed. So you might use that as a starting base for you to start tracking those assets, okay? All right, so liabilities. Liabilities represent the expenses incurred and due. There are bills that have been entered into your accounting system that have a due date and are expected to be paid out to meet your debts and financial commitments. If you're entering them in, if you're not, you need a system in place to do that. It helps keep things on the cash flow side. You can see what's coming. What do I need to pay that's coming up? And this is good for those that are having to make quick cash flow decisions. Your bookkeeper should be able to bring you a report that shows you this is what's coming up. So it's maybe your accounts payable, and then also the report to show you this is how much we have in the bank, as well as these are our accounts receivable. This is what's about to come in. You need to know that information. We talk about that too, in order to make good, quick financial decisions, okay? Some examples of liabilities include short-term debts, payables due, dividends, notes payable, lines of credit, payroll, wages, and taxes, short and long-term business loans, okay? Then we have owner's equity. So owner's equity, it lists the amount that an owner can collect after all liabilities have been paid. So to determine your owner's equity, you subtract total liabilities from total assets. It automatically does that on the paperwork. When you pull a report, it will show you this information as long as the bookkeeping data has been entered and it's timely and it's accurate, okay? Otherwise, you have to use your handwritten formula, and this can take a long time to get through. So making sure that you have all of this foundational stuff set up in the beginning is crucial for long-term reporting and tracking. And it's also crucial that you get the right professionals in your business to do the work. I can't tell you how many times I've not only personally worked in the accounting area, because I've done accounting and bookkeeping when I was in administrative roles, and I've had to unravel years worth of data to go back and make sure that it was accurately inputted instead of making adjustments to find out where the discrepancies were, because they were so many that it was hard to ever get balanced or reconciled with certain vendors or with certain accounts. And so instead of just starting from scratch, we went back and we wanted to make sure that we were squared away. Because what was happening, we had vendors who we would make a payment. We would send a vendor payment with a remittance letter that showed exactly where they were supposed to apply this payment, which invoices were open. The person on their team was not doing it. They were just taking it and submitting it to whatever they wanted. And so what was happening, it was throwing all of our information out of whack when they would send us a statement. And we'd be like, this statement does not match our records. So that happens too when you're transacting back and forth with your suppliers or vendors, and even for your clients. So if they make a payment towards maybe something that they owe, you need to make sure that you're allocating it exactly to what they see, as well as to what your system is showing. And if it doesn't, then you need to make sure you fix those errors, because that's going to help you in the long run. Okay. Let's talk about the cash flow statement. So a cash flow statement will tell you where money is coming and going and the available funds in each period. So this is something that needs to be accurate and consistent on a day-to-day basis. You need to be able to pull that at any given time and know exactly what's going on. So I highly recommend that you have somebody entering data. If you're doing transactions once a week, maybe only weekly. If you're doing transactions every single day, you need to make sure this is on a daily basis being updated so that you can pull the report when you need to. So this is going to give you a clear financial information on what you can pay based on money coming in and cash on hand. Okay, so this is helping you to calculate your cash flow. So we talk about how to calculate it in the book. I'm not going to go over that right now. You need to use these worksheets to help you. That's fine, but it's really simple. It's what's coming in, what's going out, and what do you have currently on hand? What's coming up that you need to pay, and what's going to be coming up to. This is basic money management 101, you're probably doing this already in your personal finances, or someone is. And if they are, you need to find out how to do it if you don't know how. All right. Another thing to keep in mind is that the proper accounting software, like I've mentioned, can help you run these reports for your business, and it takes all the manual guesswork out of it. So make sure you have that stuff in place. All right. So now that you understand projected revenues, expenses, and net profit, now that you have more information about the statements, we're going to talk about projected revenues, expenses, and net profit. So here's a table that I use, and this is a worksheet that's available to you as well, that is specifically projected revenue table. So you can take a look at that. Okay, I don't know how well you can see it on here. And just, these quick videos are really just free information that I wanted to give out to you. Again, if you get the book, you're going to be able to find so much more information for yourself. So the reason we've given you this table is just so that you can jot down all of the different buckets of revenue, potential revenue. So if you look back at your products and service video that you created, all the products and services that you were planning to take to market, and you've come up with those sales projections to say, if we sell this much at this capacity, this is our projected revenue within this product or service, you're going to list that in the table here. Okay. You're going to do that for anything you're planning to take to market, and you're going to put your projected number here, and this will tell you your total projected revenue for all of these things you plan to take to market that's already in the beginning of your plan. So if you haven't done that yet, I suggest you go back to those previous videos and you go develop out those products and services you plan to take to market, because those chapters tell you more about how to get that information for each one, to find out what it's going to take you to market it, what it's going to take you to launch it, how much are you going to have to pay to get this product off the ground. Those are things that you need to have in here so that you can identify what's going to cost you or what money you can make off of producing those products and services and putting them out into the market. Okay. The next table that I have in here is called the projected cost of goods table, and this is specific to your projected expenses. So we're going to have a few different tables specific to your expenses. This is a lot longer of a process because we break it down in each area of this book. For each table, you're going to be looking at different areas of expenses. So the first table, like I said, is your COGS. That's your projected cost of goods sold. This is specific. You'd find this in chapter 2 videos as well. This is specific to any time you sell a product or service, what's the total cost? So if you listed one of your products or your services here on the other page specific to your income, you need to also make sure that what is tied directly to the cost to produce that at that level is listed here. And then you do that for all of them, so you can find out exactly how much you would pay to produce at that level that you're projecting for your revenue, okay? So that's gonna help you as well. And you can get full-size templates, like I said. These are just pictures that are in the book, but the full-size templates are in the workbook. So if you purchase the companion workbook, you can get all of these templates and multiple of them, or you can just go to the website, successbydesign.biz, download these free templates. They're with the videos, and then you can print as many as you want, okay? So again, this is just for manual business planning. Eventually you're going to want to do, once you have these projections, they're good for you to start tracking it. So you'll have, these are your projections so you know where you're going and the strategies you need to make. But when you get into your systems, these projections may not necessarily be in your software unless it allows, the specific financial planning software allows for you to add any projections, and then you can pull reports to show this is what we want to do, this is what we're currently doing, and you can see where your other adjustments need to be. And there are systems out there that do that for you. All right, the next table that I have for you guys is the projected commissions table. And so that kind of looks, all these tables are very similar in visual, right? Nothing complicated here, but you're going to go back to your products and services that you're planning to launch from chapter 2. You should already have this data. So you're not having to go back and guess, you're just filling these documents out now at this point, because it's all going to transfer over to your financial projections. So log any of the commissions specifically tied to that product or service you're launching. So when you look at your revenue, that table that we developed for your revenue, you're going to look at each one of those areas and go, how much am I paying out in commissions on that? What's my potential that I could pay out, right? So if you say I'm going to pay 15% on any of these gross sales, then you need to be listing that in here. And maybe it doesn't have anything tied to it, no commission, then you won't have anything in there. Okay, so keep that in mind. The next table is your projected overhead table. All right, this is overhead expenses, and what we talked about just a minute ago is your overhead expenses. They are not your cost of goods. It's not supplies and material that you purchase, and it's not inventory unless it's specifically tied to the sale of a product or service, okay? So if you purchase inventory to keep on hand that you just keep, that would be listed in here. But if you purchase inventory when somebody orders something, that is tied directly to your cost of goods, okay? So expenses, like I mentioned earlier in the chapter, rent, utilities, telecommunications, any software applications you pay maybe a monthly or annual fee for, office supplies, those are all going to be listed here, okay? This is stuff that you generally will buy regardless of whether you sell a product or service, okay? Taxes, all of that stuff. All right, then the next table we're going to be looking at is your projected marketing budget table. So the table is your expenses. So this is where I kind of go back and forth because statistics change constantly, right? So they're incurred, marketing expenses are incurred when you promote, you advertise, or campaign your marketing needs. And we talked about marketing campaigns. So when you go back, you can look at your marketing campaigns and you can list all of the different campaigns if you want and find out what it's going to cost you and list that. Like maybe marketing campaigns for year one might be, $100,000, whatever it is, you're going to list that in here, okay? If you don't know the cost or you're not really sure, but this is going to be, what is it going to cost you for brand design? Maybe your website. It's going to be anything that's set up, content creation, any advertisements that you might post or any listings that you do, any networking meetings or chapter dues. You're going to have, those are part of your marketing, any business subscriptions or lead generation tools. So anytime you use social media for advertisement and it costs you money, those are the numbers that we're looking at putting in your budget here. Okay. And we need to allocate that so we can find out what your total projected looks like. So if you haven't done the research on that, go back to the drawing board and get those numbers. Look at your campaigns. Drill down. The details in the worksheets and in the book, they give you everything you need in order to get that information. And it's going to be estimated projections, right? You're not going to really know until you traverse down that road, but you need to have that information. Okay, one of the rules of thumb that I do, instead of actually, if you don't know this number or you're like, I don't really want to go through those details at this time, that's going to be one of those things we kind of expand on as we go because you're not sure what your marketing game plan looks like, which I still don't lean on this. I say go back and try to get that information, take the time because it's important for that research. It also tells you if you're overspending or underspending in this area. But statistics show that most businesses conservatively, and I mean conservatively, spend 10% of their gross revenue on marketing, okay? A lot of times in that year one, you're probably spending anywhere closer to like 50%. It depends because you're really getting out there and you're spending a lot of money to get your brand recognized, to get all of these foundational pieces set up to break into the market, okay? So keep that in mind. It's not 100% guarantee here, but you definitely should consider doing a deep dive in the marketing area. When we go back to market analysis and we go and find out where your people are, you can build the right campaigns for your company, for your industry, for your target market. So I keep stressing that because that's going to help you really know strategically and intentionally what you're doing with those marketing dollars. So if you don't do it that way and you want to take a percentage, go back to your projected revenue table and look at the total amount, multiply that by the percentage you're going to take, whether it's 10%, whether it's 20, 30, 40, 50, or whatever you decide to do. That's the number you're going to put in here. That's what your projected is going to look like. Okay. So if you're saying we're going to make our projected revenue for year one is $100,000, this is gross revenue. If I'm going to project $100,000, then I'm going to take 10% of that. So what is that? $10,000 is going to be allocated to my marketing budget. Okay. All right. The next area we're looking at is projected purchases. Okay, so it's important to identify equipment. We talked about this as well in the operational planning for your departments. You are looking at the different types of technology that you needed or equipment you needed to help you with a specific area of your business. So if you didn't do that, go back to it. So the financial projections leans on all of the other planning and research that you're doing in your company. So make sure that you're getting that data. All right, so reflect on your equipment, on your inventory, on other assets needed to start and or manage your business. So actually, this is where you look at the inventory. I apologize. So consider office equipment, furniture, operating equipment. You may have already listed these things as assets as well. So you might want to put any purchases that you specifically need to make needs to go into this table. Again, this full-size template, you guys can find it on successbydesign.biz, but this is basically what it looks like. All these tables are very similar. We're not getting too crazy detailed. We're just getting projected from a high level, okay? Next, we're looking at projected payroll. So again, let's go back to the chapter we discussed organizational chart and job descriptions. You should know what it's going to cost you to onboard a person for your company. So your personnel, okay, you should know what it's going to cost you for taxes that you might have to pay into it. So those are things that you need to keep in mind. Any benefits that you're going to offer, you got that information. And so when you looked at that, you might want to combine some of those positions in the early stages. But either way, you're going to list in your table the position and the annual amount you're going to be paying. It may also be subcontracted out, so keep that in mind as well, which you can list into subcontractors. But if it's specifically tied to a position, you might want to put that in there. Okay. Then the final page on your tables is your projected fringe benefits. Now, I actually don't use a calculation for this. This is not my area of expertise. Where I tell you how to go and get that information. I suggest that you actually work with an HR company or payroll company that can give you this data, workers' compensation, things like that. If you need that information, go to a company, say, we're expecting to pay this much in payroll. These are the worker comp code for each position, or at least tell them what the positions are. They can figure out workers' comp codes for you. And then they can tell you what an estimated you're going to be paying on that side looks like. Okay. They can give you a very clear breakdown. So that can give you some more insights on your budget. Now, things like health insurance, stuff like that needs to be factored in too. But statistically, most companies can expect to spend approximately 30% of their total payroll on fringe benefits. So for your fringe benefits projections and for the purposes of your projections for this, we just take your total payroll expected to be paid and we multiply that out by 30% to get you that number. Okay. All right. During the process of writing your business plan, you've used examples to determine the projected revenue and expenses. This process is so important to determine if you will break even, turn a profit, or incur a loss. So if you break even or incur a loss, you can review the revenue sections to increase profit potential. Okay. Or you can review the expense sections to identify areas where you can reduce the cost to operate your business with the goal of increasing the bottom line, which is your profits. Okay. Each table is going to be used as a guide for you to record information, tally that up, and it's going to go into the first worksheet that I showed you, which is your projected profit and loss statement. So you take all that information and you put it into your projected loss and profit statement, and that gives you an idea of what your projected revenue, your projected expenses are, and your potential profit or loss for the first year looks like. Once you do that, you may need to go back to other areas of your business and make adjustments. If you're making a profit, is that enough? Are you making enough of a profit to take and reinvest in different areas of your business? Or do you need to make more? Do you need to increase your prices? Or are you incurring a loss? Is there some things that you need to hold off on purchasing in the first year, right? So that's what this does. This helps you understand what to do to help get started with your business, how to manage that business operationally, and how to prepare for structural integrity so that you can expand. All right, guys, remember, go to successbydesign.biz. This is where you're going to find your copy of the book, as well as the companion workbook and additional resources, all of the other videos, and the free worksheets for you. So thank you so much for listening. If you need anything else, make sure you reach out to us and we'd be happy to help you. Thanks so much. Bye-bye.